Hey, what's up everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, this is my first buy of the week where I let M1 do the picking. And what I mean by that is it's based upon my allocations. We can see the three slices within this dividend portfolio. It's divided by ETF's dividend portfolio and 12 more dividends. And we can see right here that the dividend portfolio portion is underweighted. So any deposits I make will go in here until the target is met. Once we get above 28%, it's going to go likely right here and then here and so on. So in the first part of the week, what I do is I deposit $100, like I said, and then the second part of the week, I deposit $100 as well, usually on Thursday or Friday. I'm doing the video today on Tuesday because of the holiday. And on the second part of the week, I actually pick 5 stocks and I put $20 into each of those. So it's kind of a little bit of a surprise on Monday where the money goes. And the reason I do this is it takes the emotion out of it. And you know, I'm not a professional stock picker, even though I try to pick good stocks, ones I think that will do well in the future. Sometimes when you take the emotion out of it, it picks stocks that have been kind of not doing so well lately, and you're kind of buying those on sale, so to speak. But of course, what I'm doing, this is not financial advice. What I'm doing is I'm just chronicling my journey with this dividend portfolio, also showing you the rest of my net worth as well. This is about 15% of my current net worth is $277,000. So we're going to concentrate mostly on this portfolio though, and showing you the dividends, how they've gone up over the years. The last 4 years I've been doing these videos. So we can see though over the last year, the money weighted return for the portfolio is at 18.16%. When you include dividends in there, it's at 22.9%. And we'll just kind of zoom into the last month. It's been up 2.8%. And then we've had it's been really in the last week we've kind of returned back, and we're pretty close to all-time highs. And those all-time highs are right here at the end of November. We're just pretty much touching that $280,000 mark. Not quite there. But you can see though, we went to close to 280, we're back in the 260s there, and who knows, I thought we were going to maybe go even into the 250s, but I just keep doing what I'm doing, and that is to dollar cost average into this portfolio. So let's go into the activity log. We'll see what my buys were, and one of those buys is going to be a dividend drip. Digital Realty paid that $8.78, and right now my current strategy is to drip the dividends right back into that stock which paid them. So the next time that Digital Realty or the other ones that pay the dividend, it's going to pay an ever increasing dividend. So let's go into those 3 buys, and I'm going to read them off one by one. I'm also going to show you the fractional shares that were bought as a result. So for Digital Realty, that $8.78, again, this is a dividend drip, not part of the $100. It bought a 0.04837 of a share, so a tiny fraction there, but even these tiny fractions are going to increase the next dividend, and we'll go over that after this. And then Hershey's, 46.80 of the $100 went into Hershey's. Hershey's has been not doing great lately. It was in the 180s not too long ago, and we're in the 150s. And to me, I think it's a good buy at this price point. And it bought the 46.80, that bought 0.30322 of a share, so pretty much a third of a share almost. And then most of the money went into Apple, 53.20. And again, this is based upon my allocations. Just to give you some historical look back on this. This really paid off for me back in when COVID hit, and Exxon was not doing great at that time, and that's where I really acquired most of my Exxon shares, was in the 40s for Exxon. So it took the emotions out of it, and I didn't like it when M1 was selecting that, but I was buying Exxon at a huge discount there. So again, taking the emotion out of it. So the 53.20 of Apple, that bought 0.239 of a share. And since Apple does not pay a huge dividend, it's not going to raise my dividend income. Right now, immediately, maybe down the road it will, because Apple does increase their dividend year over year. So we're going to jump from M1. Again, this is a taxable brokerage account. And we're going to go to my tracking sheet, which is a Google Docs spreadsheet. I'll leave a link below. This tracks all the positions in the portfolio. So if you're curious to see what's in the portfolio, I'll leave a link below to the M1 pie. And you can see what's all in these slices. And it's going to show you everything, in the holdings and what percent I have allocated to it. You can also go over to my Google Docs spreadsheet, where I'll leave a link below, so you can see everything that's in my portfolio, and it shows the number of shares and things like that. So you can see it's arranged, everything in this sheet right now, it is sorted by the pay date. And we're going to go over each of the columns really quickly. It's a simple sheet. It works great. I don't pay for a service, and you don't have to either, to track your portfolio. So it shows the company ticker symbol, the share price, using a Google Finance function. It's pulling that live for us. Here's the average share price I've bought. You can see for Apple, for example. Here's the current shares I own. We're going to go above probably 15 shares now. And then here's the current value if I were to sell these Apple shares. Here's my cost basis. Here's my gain or loss in dollars. Here's the gain or loss in a percentage. Anything above 25% will be in green. Anything from 0 to 25 will be in white. Anything that's been a loser for me, which is Hershey's, that's why money went to that. You can see here's my average cost in the Hershey's, and then here is the current share price. So I'm kind of averaging down with Hershey's here, and we can see here's the gain or loss for Hershey's in the red. And that doesn't scare me, because I think 10, 20, 30 years from now, I think Hershey's is still going to be around and selling chocolate and other things that are in their portfolio. So to me, I think this is temporary. They're struggling right now, but we'll see. Of course, and again, what I'm saying is not investment advice. This is just what I'm picking. Here's the current yield. Here's the yield on my cost, and let's find Exxon, like I was talking about, where mostly shares were bought when I was just putting money into the portfolio and just letting M1 do the picking. You can see the average share price that I bought Exxon into, $47. Here's the current. And with that ratio, you can see what the current yield of Exxon, not bad, 3.5%, but look at my yield on cost by buying those shares when it was depressed. So hopefully it will show the same over time. Hershey's will flip the same way. We'll see though, time will tell. But again, this sheet, it's arranged by the pay date, and then here's the next dividend that's going to be paid. We're going to scroll down and I'll show you the dividend payers so far, because we're in the month of January. And I'm going to grab this data here. We can see the sum so far have been paid in January 2025, and we're not done yet for the month, is 108.30. I have some big dividend payers coming, especially BST. This is a monthly payer. I mean, look at that. And when I reinvest those dividends back into BST, which pays almost a 8% yield right now, it adds several dollars to the next dividend going forward. And we can see when I look at the dividends that BST has paid me, we can see how these have just been going up and up and up. And $4.99.19 is the last one, $4.95. You can see they're incrementing up at least $3 every month, because I keep rolling that dividend back into BST. So again, we saw the total. We're at the 108, but we're going to be well above that. You can see here's the total dividends that have been accumulated for each of these. You can see BST, over $10,000 in dividends have been paid. But the only bad news with BST, besides the high fee with BST, is they haven't raised their dividend for quite a few years. It's been like 2-3 years. So that's why I've put a VAR for variable for the last time they've increased their dividends. You can see though, like Kimberly-Clark, we're expecting a dividend increase in January. That was the prior year. There's some others out there like Black Hills as well that we're going to expect another dividend increase as well as BlackRock. So we have hopefully some good news coming up here in January for dividend increases. I'm going to scroll down to the bottom of the page here to show you. Here's the total value of the portfolio, and of course there's a little bit of a disconnect between Google and M1, and also the $100 has not been reflected in here in the buys. Here's my cost basis. Here is the gain loss including dividends in here, and here's the color key. We're in January. We're in the light greens for those, just so if you're curious why I have the 3 different greens in here. And I also have 2 blues, which are those are my monthly pairs. So I'm kind of big on colors here in the color key. Explains all that. I haven't sold anything lately. So if I sold something and hasn't paid out their dividend yet, it would be in yellow. For example, if I sold Oracle, where they have not paid their dividend yet, I'll keep them in there, put them in yellow. I'm not going to sell Oracle. It's been doing quite nicely for me, almost doubled my money. So just an example though, that's where I would highlight that in yellow, and then after it's paid its dividend, I would delete that row. Then here's the monthly pairs. Like I said, I have to put them into an array here because once when I want to count up my quarterly dividends here, it's missing 2 months of BST and O, so I have to add them in twice. That's H60 times 2. And H60, of course, is the sum of those 2 monthly pairs. And that's what I do as I do a VLOOKUP to pull the value for BST and O, because once I shuffle the deck for those, it's hard to add them in twice. That was the best way, I thought, logically, just to put a little array table in here and add them in 2 more times to get the month or the quarterly. And then you can see here's the quarterly, here's the monthly, here's the annual. Let's go ahead and copy these over because these are going to go up once we paste in some information from M1, and the information is going to be the fractional shares that were bought as a result of these 3 buys. Get a drink here. We'll go back to the holdings tab. We're going to actually grab that data. We're going to paste it into the M1 data tab here. And you're curious, I'll just go over the strategy. Right now I'm doing $200 a week on Mondays and Fridays. Again, it's flexible because of the holiday we had, so it's Tuesday. And then sometimes I do the buys on Thursdays depending on time. Excuse me. And then the dividends are reinvested in the company that paid them. And if a dividend is cut or suspended, that stock will be sold out of the portfolio. So I kind of had some rules in here. I'm a buy and hold investor. And again, what I'm doing here with this dividend portfolio, that's 15% of my current net worth. I'll show you the rest of it here in a little bit. In 2025, I do want to use reinvesting in dividends using auto invest. And so it'll kind of go where things are on sale. But I haven't done that quite yet since I'm still just stripping those dividends. But I want to get to a net worth of $2 million, pretty close. I'm at over 1.8, so we'll go over that in a minute too. I want to get the monthly average dividend up to $12.50. We are at $1,035, so we have a ways to go. I want to pay off my house and then stick to the 2 buys per week. So let's go ahead and we're going to grab that data from M1. And I kind of devised a cool way how to update my sheet to update the new number of shares, average price, cost basis for anything when I do any buys or sells, anything like that. All I have to do is just go over to M1, go to the holdings tab, start the name column, and grab everything. We're just going to do a simple copy. We're going to paste this into my Google Docs spreadsheet on the M1 data tab. It's going to automatically change these values here because of those buys, the 3 buys, and it's going to change the next dividend for Apple. It's going to go up here slightly because Apple pays a tiny dividend. It's a 0.45%, and it's not going to move the needle a whole lot. It's going to move the needle more so on Hershey's, which the current dividend is $11.65. And the reason I hard coded that in there is so we can see that the change, the next dividend, that even $100 is going to move the needle a little bit. We're also going to see the next dividend for Digital Realty, and that $9.35 is the next one. You can see I bought some fractional shares after the ex-dividend date, and my last dividend was 878, so we're going to see that 935 go up here just a little bit. It's going to probably go to 937, something like that, just a few cents, because there's only 878 going back into digital realty, but we'll see that change as well as these three values here. So let's go ahead and we'll pay special that data. Remember, I grabbed from M1 values only. It automatically I'm using VLOOKUPs. So you can look on the logic on my sheet. It's just using VLOOKUPs and comparing it against the ticker symbol for like BST for example. It's using a VLOOKUP to pull the number of shares, the cost basis, and the average share price. It's doing that for all positions, but the only ones that are changing are the three where I had the buy into. Let's go scroll up and we'll see how we've changed the next dividend as well as the monthly, quarterly, annual. And then we'll go over historicals and we'll close it out with my net worth statement. So the last in 3 months from now for Apple, actually, what would that be? In February, that next dividend is going to move from 372 to 378, so adding 6 cents. But again, that yield is so low, but every little bit helps. We were at 14, I think, 0.9 shares before the buy, so we are above 15 with that Apple buy there. So I'm going to delete that. So our next dividend in February is going to be 378 for Apple. And then take a look at Hershey's. The needle was moved more so, of course, because the current yield of Hershey's is higher, much higher than Apple. And we're moving from $11.65 to $12.07. If you're curious, anything in green means it's a dividend of $10 or more. So I want to get as many of these as possible up above kind of the $10 mark. It's more significant. I think $10 to me is kind of like, it's kind of a little goal, but I don't buy more shares specifically, to get everything above. If I think like Broadcom, for example, is a bad buy, I'm not going to buy it just to get it above that line. So we went over that Hershey's, the next new dividend, and then Digital Realty, I wrote that down. It was at 935, so it added a little bit more. We have moved up to 941, and that will be the next dividend in April for Digital Realty. And I'll show you something really quick. So here's the dividends that have paid out to me so far in January, 108.30, but in April, just with the dividend reinvestments, things like that, and buys, we're going to move from 108.30 in April to 113 even, and that's just for these positions. And you can see just every little bit helps. These $100 deposits, these dividend drips, as well as dividend increases. So we're going to scroll down. We're going to take a look at the change in the monthly, quarterly, and annual. So we're moving from 1,035.78 to 1,035.96. And then quarterly is moving up from 3107.33 to 3107.87. There's a bigger move here in the annual, moving from 12,429.31 to 12,431.47. We're going to take that monthly rate, we're going to put it onto the monthly average dividend tracking tab. So 1,035.96. We'll put that in there, 1,035.96. And that changed my monthly income going forward by 18 cents. And that was the $100 deposit and the Digital Realty drip. And I know that doesn't sound like much. It isn't. But half that money pretty much went into Apple. I think most of it actually went to Apple. We'll go back to and review that. I think that's where most of it went to, and Apple pays a tiny dividend, so it doesn't really move the needle much. But yeah, 53 of it went into Apple, 46 into Hershey's. So if it all went into Hershey's, of course, it would have moved the needle more. But I'm not interested in buying high yield dividend paying stocks that aren't going to raise their dividend. I could just put everything into something that pays a high dividend, but I want growth in the shares, the share price, as well as the quarterly or monthly dividend. So that's why, and I also have a lot of different positions because I want to have diversity in case one of my positions stops, if they stop paying their dividend, and I cut them out, it's not going to really have a huge effect on my dividend income at all. So we've covered that. They add in 18 cents. Let's go on to the dividend tracker tab and look at some historicals. I started doing these videos and tracking this dividend portfolio back in January 2021. Here's the portfolio value. In my last video, I kind of went over the history of the portfolio. Go back and listen to that, and you'll hear my spiel on that. We can see the full dividends paid for the full month of January 2021. Let's fast forward to January 2025. You can see there's the 108.30. Here's the portfolio value rounded to the nearest $100. We're close to the all-time high where we closed out at the end of November at just close to that $280,000 mark. We're going to scroll over here, and you can see here's the quarterly results as well. Here's the total annual dividends paid. You can see from 2023 to 2024, we're heading upwards. Are going to be well over 12,000 for 2025. And then here is the average monthly dividend, well over that $1,000 mark. Of course, we will have a regression in March because of SCHD. As everyone knows, they pay a lower dividend for Q1. We'll see how much we dip. I think we'll still stay above the $1,000 mark. But then in Q2, Q3, SCHD will push us to even higher dividends above this mark. So we've made a month-over-month gain in the average monthly dividend of 0.13%. And then here's the annual dividends we covered. We've added an annual increase of $16.63 so far, adding $100 because of that deposit. So we're at $600. You can see I don't make giant deposits right now. I've just a couple times I've kind of deviated, and there was a time where I was just putting in $100 a week. But right now, you can see it's been $200 a week around there for a while, with the exception I put an extra $1,000 in there to kind of rebalance the portfolio, so to speak, without selling. You can rebalance by doing a deposit, and that's what I did there with that extra $1,000. So to close out the video, we're going to go to my total net worth. Like I said, this dividend portfolio over here, the one that's right now at right about 277, almost 278. That's 15% of my total net worth. Let's go over the rest of it. And I believe in having a good foundation of ETFs that are low-fee ETFs. Vanguard is just an example. Schwab, Fidelity has like zero fee. ETFs that are, or mutual funds that are, total stock market S&P 500 types. And they're like FZ Rocks is one of them. Maybe to look at Fidelity, but the Vanguard ones, they're super low fees at like 0.03%. So it's pretty negligible. But you can see over at Vanguard, I have an IRA, a Roth brokerage account, taxable account, and right now total value right about 481. Here's my current employer since March 2020, and that was pretty much the start of the pandemic. I started this job, and I haven't maxed out my 401k for a while. I've kind of pulled it back to have a little bit extra cash, and right now that's at 102. And then over at M1, this is my prior employment from 96 to about 2019, and this is valued at 718. And then over here, here's the dividend portfolio, that line item. And then here is my 1-year emergency fund at over at M1 paying 4%. And then Synchrony, I have a 6-month emergency fund, 26.5. And then here's 2 months pretty much of spending that I keep out there. I need to move probably about $2,500 out of it or more, because I don't like to keep more than 10,000 over here because it's a little bit lower APR. Can move it over to Synchrony. My next paycheck, I will do that. Here's the value of my home. Here's my liabilities. I have 2 of them. And here's my current credit card balance, which I do not carry a balance over. I pay it over before interest accrues. That's not due to the 9th of the month. So I have till February 9th to pay that off. I have plenty of money in over here at Capital One. That's where I deploy that money over. to pay that off. And here is my other liability, which is my mortgage, which I want to pay off early. And I've been making extra principal payments to that to more aggressively pay it off. Here's my total net worth, back above 1.8 million. Here's the breakdown in stocks, home equity, and cash. Here it is broken down in pre-tax, after-tax, as well as U.S. and international. This sheet also shows my average monthly dividend for my other investments over here at Vanguard. I know a lot of people don't look at this like what their 401k, what that average monthly dividend is. I've calculated it out. I didn't even look at that before when I was just, before I was kind of into the financial independence, retire early kind of community. I didn't really even count this at all or even look at the potential like dividend returns, or of course my dividends are just being reinvested back into those investments. But since I'm 51 right now, I'm looking at, okay, what are these investments paying me so I can just live off of the dividends alone. So I calculate the average monthly dividend as well as interest for savings accounts over here as well. You can see that that's savings, and counting the average off of that based on the APR of those, and then I count up all of them. It's almost $3,500 from those sources. So I could, if I had access to all of this, the IRA, the 401k, I could just live off of the dividends alone. That's of course with a paid off house. I could probably still get by even with a mortgage off of that. It would be pretty lean, but I could do it. But with a paid off house, I would live quite well just off of that. But by the time I have access to this, it's going to be much higher than this. Since I'm still working, I'm contributing to my 401k and buying more shares out there as well. And of course, dripping these dividends as well into sizable investments. And these investments, they're going up faster than I can contribute to them. And they're actually going up faster annually than my whole entire, annual paychecks. It's amazing to watch that. So you can see over here from like November 2022 how my net worth has gone up. We can see I was at 1.2 just a little over 2 years ago, and then I'm above 1.8. So that's all I'd show you guys for this video. Were my two picks, and again, this is based upon my allocations over at M1. And it went into Hershey's and Apple. Digital Realty was a